All right, everybody, welcome back to another episode of the Dividend Doggo Show here on YouTube, and I'm bringing you into a weekly portfolio review this week. This is the week ending March 4th. We are already 4 days through March. This is wild. The market had a pretty crazy amount of fluctuation throughout the course of the week, but let's take a look. You can see overall the portfolio is still moving kind of in that upwards trajectory. I was pretty amazed that it ended up the week the way that it did. However, overall, you can see down by the categories that this is the overall returns of each of the different sections of the portfolio. And overall, everything is still relatively green. We've earned a fair bit of gains, both from dividends and direct market capital gains. Then if we go into 1 week here, we can see that, doesn't really look like anything happened for the portfolio, to be honest with you. When I look at a return like this week, it was all over the place. This was red up until the very end of the day on Friday. This fluctuated pretty significantly. Now, what I want to take note of here is that regardless of market fluctuation, we're still earning dividends and we're still growing our dividends every single week on this channel that you come to watch it. I want to be growing something as far as dividend growth wise. I want to see forward income going up consistently, whether the portfolio's value is down or the market gains are down for the week. I want to be raising the overall dividend yield that is coming, as well as the dividend growth and the just flat dollar amount. So what we're going to look at today is going into the 1 week here. We can see that there's some pretty massive overall fluctuation with the portfolio. You can see the finance sector took the large hit there of 9.47%. I still believe in all of these stocks that I hold. It's just that world turmoil and all of the chaos that's going on in the markets is basically kind of creating this pretty wild fluctuation that the finance sector is getting hit pretty hard with. Now, I want to iterate that, sometimes you buy positions and it isn't the right time, right? You can do due diligence, you can research stocks, and you can see that their assets are going up. Everything's moving in the right direction. But there's unknown factors that will come into play. And with the ally position, I know, it's a little bit crazy to look at this, but overall, this is a pretty crazy trajectory. It was up, it was down, but overall right now we're in the red pretty significantly on this position since I purchased it. So we're about $4,000 down, and we've earned $180, basically $181 in dividends on this position already. So I'm going to be looking to hold this one for a longer period of time, than 1 year, 2 year. I'm hoping that a decade from now, this company is doing phenomenal, and we can see a lot of these, the gains, going up and into the right and green, versus being in the red consistently, on the month, the quarter, it's down pretty significantly. Overall, for finance, I'm not too worried about the companies there that we hold in the Doggo portfolio. I think they'll bounce back with the market and continue to grow, especially companies like JPM, Bank of America. Those are just going to be staples to the portfolio, and they're going to continue to grow their dividend, which is going to continue to give me that forward income to further create the snowball here. Now, I left it on 1 quarter in an accident. So overall, consumer was up about 3%. Now, this was primarily driven off the back of Target. Target, Home Depot, and Lowe's all had pretty solid weeks. The Costco earnings were pretty good as well. So I expect Costco will probably go up a little bit. But you'll see that our position in Target's a little bit bigger, so that's going to bring me into what I did this week with buys. So we had some dividends roll in, and I did buys on Home Depot and on Target. I did this pretty strategically to try to add a couple more shares of each of these companies, just to make sure that they're growing for the year forward. Then the other one that came in was BST. I wanted to add enough. This wasn't quite the dividend there, but I wanted to add enough that it was to buy a share. So I want to try to add a share to BST every single month going forward at the bare minimum. If we have some more big dips where I can, buy in a few extra shares, I probably will on BST, because I think it's a pretty quality fund to have, even though it is a very, very high expense ratio and fees based stock to hold. I think that it's pretty solid in quality, and it's one of the only ones that you can get that's an income fund that's a 5% ish yield, that is just solid. I really like the fundamentals of what the portfolio brings, and the fact that they do the way that they do the covered calls to try to make sure that the gains are long-term capital gains is just phenomenal. So Home Depot and Target had an amazing earnings call. They're rocking it. They're raising their pay for markets that they're basically highly contested for employees to like $25 an hour almost. That's pretty wild for retail. That's even higher than Costco, and even in markets like LA and Seattle and on the East Coast. That's a pretty high base pay rate for retail employees. So I'm pretty excited to see that go into play and see how they do with making improvements to their 401k plans, their paid time off for employees, all of that stuff. They're making a pretty huge investment in the retail sector into employees, which over the past 20 years, my experience with like Walmart and other retailers is they generally don't care about the employees that much. Very, very rarely do you hear about companies that actually care much about their employees. Costco is one of the shining examples of that for the retail consumer to go in and visit. Home Depot is another one that actually does a pretty good job of taking care of their employees. But overall, there's always going to be room for improvement. So I'm pretty excited about the future for both Home Depot and for Costco and Target. All three of those are just rock star cornerstones of the consumer pie that I don't know if I'm ever going to have an amount that I'm just completely content with on those stocks. Maybe once we actually go to retire. But as you can see, healthcare was up just slightly. Utilities was up about 4,000 for the week. That's mainly off the back of a pretty amazing jump there from Duke. Duke went up 5%. That's pretty phenomenal. I do wish I had bought a little bit more Duke. Duke is a pretty high earning, low yield growth, as where Vistra is low yield, high growth. We'll see how they kind of do. Duke is a bit more regulated than Vistra, so it doesn't have as much room to actually grow the dividend at this point, as where Vistra can definitely keep pushing it up, 12 to 18% a year for the next 3 to 5 years at least. So I'm going to be curious to see how these two both perform. I wish that I had added more to Duke over the past 2 years, especially when they were really cheap around the time of the pandemic first starting. Overall, Coma Money was up just slightly this week. Tech was down just a little bit, 1.45%. That's not too bad. Industrials, this is the big one. Lockheed Martin was up 12.65%. I know that, where most financial YouTubers are probably covering all of the stock picks that people are saying to go to if we're in a wartime. However, I had been putting money into Lockheed well before this. I haven't really bought shares recently. They were at a pretty good value a couple months ago, and you can see, the let's go in and take a look at them. The last quarter, like, you could buy shares relatively cheap. They were as low as like just over $300, and they've just consistently gone up and up and up and up and up. And that's just over the last quarter, just from the beginning of December over. And I've only got 22 shares. I do wish that I had added some more. However, there's a good chance that this will continue to go up a little bit, but it's just not as attractive as a buy for me at 458 as it was when it was only a little over $300. My average cost for my shares is $339 a share, so this is up significantly from when I made these purchases. But overall, I do believe in the company. I always have, and it's another one of those, like, Cat is in the red right now, but Cat is also one of those companies that operates heavily in China and other parts of the world. It's construction and industry in general, the industrial stocks, like, you have to really watch where they're going and what they're doing, and look at their values individually before you buy into them. They're not one that I want to consistently be adding to, like, on the regular. I would much rather selectively buy them when they're at very attractive price to earnings ratios, or they're just at a steep value, or they've had a big sell off. When they have a run up like they've got right now, that's not necessarily one that I want to put a whole lot of money into right now. So back to the weekly portion, the weekly stocks were down. BST was down a little bit based upon the tech stocks that it holds, and overall the owner's pie was down. I'm going to let you guys take a look at this. This is just the credit card rewards that you get cash back from. So I put a little bit of money into these. We've almost made $600 back on the owner's rewards already this year. We're only 3 months into the year. So we had the December payout in January's in February, and then February's we just got. So it's pretty wild. I'm going to do a little tally of what I've earned from shopping at these companies since, doing this little micro investment for all of these. So as you can see, most of these stocks only hold a few dollars, $20 or so each on average, with the heavier weight being into like Amazon, which has come down significantly over the past few months. And the past week, apparently, Amazon was down pretty heavily this week, 1.53%. So overall, this is just a pie to receive the credit card rewards through M1 Finance, which so far has been very, very nice. It's more than enough that it will have paid for the M1 Plus service, and the credit card is free if you have M1 Plus. If you don't have M1 Plus, you can pay, I think it's $90 per year, but you can double check when you're doing the sign up. They may have some special promotion running. So overall for the portfolio on the week, we're up $700, of which 210 is earned dividends. Very proactive with the purchases this week, throwing what money I could into the portfolio. And I will be coming back at you guys very soon here with the overall earned dividends for the month of February. That video should be interesting for everyone to see where the bulk of the dividends came from that went into the portfolio. And then from there, we'll see kind of what the next week takes us. I hope everyone has a fantastic weekend. I'm going to get some periodic pictures up that y'all can comment on. I'm going to make a couple little posts. We've had a little life update. We adopted 2 puppies yesterday. So we've had them now for about 30 hours or so. They're doing really good. They are 2 Labrador mix puppies. And then we have our Dutch Brindle Shepherd mix puppy, who's about 7 months old at this point. But these little guys are about 11, 12 weeks old. So I will get a couple little pictures up of them to YouTube just so that everyone can kind of see what they look like. I might actually splice them into the video here. Thank you very much for watching. I hope everyone has a great weekend. I'm probably not going to get much sleep this weekend because that's what puppies do. They keep you up all night and keep you active. But I do want to thank everyone for watching. I appreciate all of the comments, the likes, and the subscriptions on YouTube, and everyone that's used the M1 referral link. I greatly appreciate every single one of you. I believe that promotion's still running. You can check in the link down below. It's usually $50 when you sign up, but always double check it. Thank you very much for watching, and let me know what you purchased this week. Are you excited for the week coming into March? What do you think the market's going to do? Do you think March is going to be an overall green month, or do you think that we're going to have a lot of fluctuation and a big roller coaster ride for March? Again, thank you all for watching and have a great weekend.